Howdy there, folks. Welcome into tonight's video, a rare outdoor special here tonight, okay? First one up here from an hour ago, everybody's favorite bull, Tom Lee, on what he thinks is up to in the market and the Fed and all those sorts of things. Watch that one. I want to react to that one, give my opinions and perspectives on that one. Then I want to react to this one. Tesla and Google will be the biggest tailwinds from autonomous vehicles. I want to hear what Gene Munster has to say in regards to this and kind of give my opinions and perspectives out there. So yeah, hope you guys enjoy this as always. Appreciate you all being here. 33,200 plus subscribers now, new all-time high. Thank you every single person. Subscribe to the channel. And also, if you haven't subscribed to my Patreon and you want to do it, I will go ahead and do it. It's the pinned comment down there. It's up to you, but it's pretty awesome if you haven't heard of it. You get to be part of the Discord chat. And you get to see the moves I'm making, which I am making moves tomorrow in the Patreon portfolio. I will be buying some stocks tomorrow. I might be doing a hedge tomorrow inside the Patreon portfolio. So you get to see what moves I'm making, what stocks I'm buying, selling, hedges I'm making every single week being part of that. For 19 bucks, it's a no dang brainer. So make sure you join in there. There'll be pinned comment down there. And let's get into this.
Breaking down how all of this may balance out for your money after what has been, and let's be honest, a pretty doggone good start to the year or mid-year for stocks, and bringing our friend Tom Lee of Fundstrat in person on this epic hour. Tom, thanks for...
What are these guys doing back here? Where is this even filmed? What is going on here? Where? Cheesecake Factory?
Coming down here as well. You've been one of the bulls. You have been right. Inflation is coming down. The market has been, I think soaring is a pretty good word. We're up 17% year to date. What have you done for us lately? Where are we going from here, Tom?
Well, Brian, I think that was a great rundown you gave.
There's a lot there.
Yeah, but I think as
Are these Tom Lee fans back here? He's got a fan club.
people peel the onion, this was a very good inflation report because it's setting up for the next 2 months to see inflation slow even further. Because the things that you mentioned, like core services, ex-housing, that came in at 0.22, like 4% year over year. But you're dropping 2 big months of August and September last year. So the next 2 months, that thing's going to start to fall. I think markets should have rallied pretty hard today on the inflation report.
Well, they did. We were up 400 at one point of the Dow. We ended in the green just a touch, but we came down. We lost that 400. Is the Federal Reserve done raising?
By the way, is the Federal Reserve done raising rates? Let me show you guys what happened here today in the market. Because actually... Let's see. Let's see. I want to look at big tech, actually. I mean, it was a decent day out there. A lot of big tech was green here today. Not much green in terms of the percent green, but it was decent. Let's see if the ARC stocks did. It's kind of like a very boring day in the market is the way I'd describe it. The only drama was really Tapestry today, but overall, pretty boring day in the market.
Rates, or with today's number, is it, possible we get another rate hike?
Yes, let's say I was originally in a 60% chance that July was the last hike. I think it's now in the 80% range. I think that the Fed is done hiking for the cycle.
There's a big difference between done hiking and starting cutting. And listen, we're in the media. I fully accept this blame, folks. We're either one all or nothing, right?
Yeah.
Is there any talk of a rate cut at any time soon, or is that just nonsense? And we're going to have to live here for a couple of years.
I think rate cuts are definitely coming next year. Let's say that most people think it's second half because the Fed doesn't want to tighten rates, but if inflation's falling, they have to cut rates. Otherwise, it's actually constricting the economy more. I think they're going to be thinking about cuts early next year.
Is that one reason stocks have done well? Not just here, by the way, around the world. Europe has done well, number of emerging markets. But is that the reason that we're seeing a 40% jump on the NASDAQ this year? Is that all you guys, your hedge fund buddies, they're looking out 9 to 12 months, and they're looking out maybe at those cuts and that added, because stocks generally go up when there's more liquidity, not less liquidity.
That's right. And, I think the stock market's just looking at the 10-year at 4 and saying, you know what?
So the thing you got to be careful with is, a lot of people are running to this assumption like, Fed cuts rates, that's great news. Like usually when the Fed's cutting rates, usually the market's tanking. So this is some food for thought there. Like usually it's not a very good, because usually the Fed, if they're cutting rates, it's because things are going bad and they feel the need to cut rates. So don't always be in a rush for the Fed to cut rates, because usually they're doing it because things are breaking in the economy or the banking system or some sort of scenario like that. So if anybody's running into the assumption that when the Fed cuts rates, it automatically means market skyrockets, it doesn't actually work that way.
It's there for 5 years is actually a decent level for the stock market because it's a high enough rate.
Look at this guy back here. He's like, oh my gosh, that's my favorite bull, Tom Lee. He's on CNBC.
Too much capital from forming, but it's a low enough rate for companies to earn a lot of money. So it's historically it's nirvana for PE. The PE should be closer to 20 times if we can see the 10-year stay around 4%.
Yeah, I'm old enough to remember when 4% was considered impossibly low.
That's right.
And by the way, that was like 4 years ago.
Yeah.
And now we're doomed at 4. But I think
more like
the bears would make the argument, Tom.
30 years
4%
ago.
by itself, not bad. 4% with a $1 trillion plus deficit, heading to 50 trillion in national debt, $1 trillion in consumer credit card debt, couple trillion in housing debt. That it's the level of debt, not the level of borrowing cost. That's the problem.
That's right. All the things you described threaten the dollar as a reserve currency. The dollar's held up great. I think if the dollar really starts to weaken, then we have to worry that 4% isn't the right rate because they're going to have to raise the rate. But I think for now, the stock markets and bond markets are saying dollar's the currency.
Putting you on the spot, I know. We end the year higher in the S&P 500 than we are right now.
Absolutely. I think we're going to take out all-time highs before the end of the year.
Wow. I wasn't expecting that. Taking out all-time highs by the end of the year. What's my thoughts and perspectives on that? I think it's a potential. I'm just thinking, like, if we can get CPI to continue to come in line and we don't see any major spikes, that's the important part. And NVIDIA comes in, let's say, and actually comes in with great numbers. And let's say we see a reacceleration of growth in the quarters that are going to be reported around end of October, November, then we could be looking at Santa Claus rally on top. That's how you get to new all-time highs in indexes. So it actually does have potential. It's certainly not a guaranteed thing, I'll say that. But to see all-time highs, it's a potential. I'll put it like that. I think I would call it like a coin flip, a 50-50. In terms of a major crash in the market here at the end of the year, probably not super realistic because the economy is probably going to be okay, pretty decent actually. And if anything, it's going to confuse people because it might actually look like it's strengthening in the back half of this year, which should be really intriguing. But don't let that confuse you and think like because the economy strengthens in the back half of this year, like it's going to automatically strengthen in 24. It doesn't really work that way, okay? Alrighty, Tesla, Google are going to get the biggest tailwinds from autonomous vehicles. What's Gene Munster have to say?
Is voting on applications from Cruise and Waymo to add more vehicles and operate autonomously 24/7 throughout all of San Francisco. The decision of which could have a huge impact on the industry and the experience we all have on the roadways. Let's get to Phil LeBeau with the details. What do we know so far, Phil?
Well, the meeting has just begun, Kelly, and I think this is towards the bottom of the agenda, at least the last time we checked, so it may be a while until we get a final decision from the CPUC. But let's recap what you said in terms of what this vote is, because I've seen a number of people say, well, this is going to allow them to put autonomous vehicles all over the state of California. No, this is strictly about 24/7 service within San Francisco and other things like they might be able to add split fare routes in the future. And it's just for Cruise and Waymo. They are the ones who are applying to the CPUC. Why are they applying for expanded service in San Francisco? Well, over the last several years, as they have been testing their vehicles and testing the autonomous vehicle technology on the streets of San Francisco, they have expanded the number of vehicles that you will see out there. And if you go out to San Francisco, it's not uncommon to see a Cruise vehicle or a Waymo vehicle. There are 300 in operation for Cruise, 250 for Waymo.
I was going to make jokes about a lot of things that are very easy to see when you go to San Francisco, but that's too easy. That's too easy.
The issue here is whether or not they should be allowed to go 24/7, allowing autonomous rideshare. There are some.
And also, I like San Francisco. Like, I don't want to be dissing on San Francisco, man. I think it's a great American city. It's just been going through some struggles.
Many leaders within the state, within the city of San Francisco, who are opposed to this. They point out that there have been some very high-profile incidents where autonomous vehicles have stopped in the middle of roads, have sometimes blocked emergency response vehicles from getting by, whether it's an ambulance, a fire truck, police car, whatever it might be. And in general, they're not quite ready for prime time. At least that's the contention of the officials for the city of San Francisco. So as you take a look at shares of General Motors, keep in mind that GM has a big bet on Cruise. It believes that Cruise will hit $1 billion in annual revenue by 2025. And it has been expanding the number of cities where Cruise is testing out its service. Dallas, Houston, Nashville. The idea is that eventually they want Cruise to be an autonomous rideshare service.
Yeah, Houston, Atlanta, Vegas. So the good news about GM stock is basically there's nothing valued in that for Cruise. Like literally nothing. This stock is purely just valued on the internal combustion engine business and nothing to do with Cruise. So if you actually believe in Cruise and you actually think Cruise, oh, geez, my baby scared me. I was like, what the heck? I thought a coyote jumped in the backyard. You scared me, dude. The great news is, you really want to say hi? Say hi. The great news is, in regards to GM, if you believe in Cruise, like, actually GM stock's an easy buy.
That can operate nationwide. Now, we're a long ways from that happening. We're just talking about the city of San Francisco at this point. But there are a lot of implications here, Kelly.
Oh, tons. Phil, stick around as we bring in a couple of more experts to weigh in. Mary Cummings is professor of robotics at George Mason University and an expert in this space. And Gene Munster, of course, an expert on the stocks. He's managing partner at Deepwater Asset Management. Welcome to both of you. I suppose, Mary, let's just start by asking your view on how likely they are to give these companies permission to operate as hoped.
Well, depends on who you are, but a lot of people are betting that they're going to get the approval, that this is really just a formality. But I think the more important lesson to be learned out of this is, regardless of whether or not the vote goes in the favor of Cruise and Waymo, this has been a huge public nightmare. And even if they are allowed to expand their operations, I think you're going to continually see negative public sentiment. Groups are going to continue to rally, and they're going to now create YouTube channels to continually rat out the behavior of cars.
And that's the thing that sucks, because people are so dumb. Oh, it's so frustrating. You know, here you have, ridiculous amounts of people dying on roads every day, highways, getting severely injured. Happens every day in every city, right? People are not good drivers. They are not, okay? And here you have this technology that should potentially be able to do a million times better job of driving and not getting in incidents than humans do over time. But we need to train the system so they can get that to that place, right? No different than a calculator is never going to make a mistake and is going to be, far more accurate than a human and be able to calculate things way quicker than a human can, right? But the problem is people can't, if one person gets hit, they go crazy. Oh my gosh, like these things are the devil, right? When people are getting hit constantly and in accidents constantly that are humans driving, right? It's very frustrating, very, very frustrating. And so that's the annoying part. And that's going to be a process to go through. And unfortunately, she's 100% right. I wish it wasn't that way, but it's going to be that way.
When it turns out to be not very productive and or unsafe. And so it's kind of surprising that Cruise and Waymo are pushing so hard in San Francisco, because clearly it's not just the city officials, but the public is not crazy about this car. And even if they do win the vote, I do not see smooth sailing ahead.
Gene, what would you say about that? And how are the sort of mega cap stocks most affected?
Well, as far as the sailing ahead, I think that the topic of self-driving basically has three pieces to it. One is the problem. Humans are bad drivers, and disappointing to report 40,000 plus people lose their lives in auto accidents. Second is the tech. We're not there yet. Elon thinks we're there by the end of the year, which means we're probably a few years away. And then there's the political piece to the topic, and that's what that's the pressure point today. And this political piece is ripe for amplification because as politicians, many of them are content creators, and they want to build a narrative around their views that get people to move into action. And self-driving cars are one of those polarizing topics. And I think ultimately is that this political piece today doesn't really change the outcome of what's going to happen with autonomous driving. In the end, autonomous driving is going to be here. And I think that we're all going to be very happy for that 5-10 years down the road. And if you think about companies that are going to be benefiting from it, I think the two are most clear. Tesla, front and center. Elon said on their last earnings call that he expects a 30x times increase the amount of miles training their FSD within the next 12 months. And then you have Google with Waymo that doesn't get a lot of attention. So, Kelly, it's a function of time, and it's Tesla and Google are the two companies.
Yeah, so in terms of who's going to benefit the most, definitely Tesla. I think it benefit huge. You know what company, sneaky company, it's not talked about, and this company is going to directly benefit from autonomous vehicles as much as anybody in the world, okay? And no one really talks about this one. Everybody's trying to figure out, is it Tesla, Waymo, is it Cruise? Think for a moment. Picks and shovels. NVIDIA. NVIDIA is the one that's set to benefit as much from anybody for autonomous vehicles. Their chips are absolutely necessary in the process. So I think that one is just, a huge one. If you're confused on, is Tesla going to win, Waymo, Cruise, other companies, other competitors, right? Like, you can always just go kind of picks and shovels route, and that's NVIDIA there. So that is something to kind of keep in mind, okay? Appreciate everybody joining me as always. Thanks so much for being here, folks. If you're looking to join my Patreon and you want to get in there, check out the pinned comment down there, folks. Tomorrow's the big day, making moves. You get to see my moves every single week. It's pretty darn valuable. Much love, and have a great day.